Hello, I'm James. Welcome to my video. This video is about future of traditional financial institutions. We'll discuss about the future of traditional financial institutions and the impact of fintech on traditional financial institutions. Moving forward to the video, first we'll discuss the perception and transparency of regular financial institutions after the 2008 financial crisis. The perception of transparency and accountability of the global financial industry by regular consumers was eroded after the 2008 financial crisis in the US. Was the big banks hid the truth from their clients. Big banks like Chase, Morgan Stanley, and Lehman Brothers hid the truth about the financial bubble, the housing bubble that was looming over them. The clients were unaware. Even after years after the financial crisis, the large financial institutions still making the same mistakes. They are still conducting business the same way. They did not learn their lessons, and this may cause another financial crisis in the years ahead. After the failings of the big banks, today most of the clients are started to use banking services on their mobiles and internet, and banking services are becoming less human interaction, and visiting physical branches are going down. As a result, loyalty to specific banks have eroded. Because of the 2008 financial crisis, the trust eroded. Moreover, people stopped trust in huge banking institutions, but they still use some functions. But this time, they only use alternatives. Closing of physical branches has gradually depersonalized the banking experience. I personally don't fully agree with this statement, but when the clients are less inclined to visit the nearest bank branches and use the bank services from home, the banks can actually do better by offering online. Technology companies are now offering the same or even better banking experiences and services for the customers. So these services are using much linear systems instead of heavy labor intensive systems, and also maintaining good relationships with the clients. So the clients are much more involved with these institutions. Social media, mobile banking, help of 4G and improve the performance of financial services. Now we can use all financial services from our palm of our hands, through use of internet banking. E-commerce platforms like Amazon has transformed consumer empowerment. This has set a new benchmark for mobile services, rising consumer expectations with over other services and impacting negatively on the consumer satisfaction with their traditional banking reality. Today, clients are no longer passive partners to the commercial banks, and they are proactive members of an ecosystem, proactively taking part in the financial organization's operations. Today, banks, especially European banking authorities, are enacting laws that regulate and address systems like open banking, and securing client data. Laws like the GDPR are forcing banks to rethink their clients' data policies and arrange the data policy accordingly to the GDPR specifications. The changed global situation has increased tolerance and acceptance of the new technology based banking organizations. And these organizations are no longer seen as financial organizations but as technology institutions that provide financial services. This is the end of my video. Thank you for being a wonderful audience.